morning, good afternoon, good evening, depending on where you are joining from. I am Gauri Das and I'm your host for this chat show, Factoring, one stop solution for your global aspirations. Today, we have brought to you two amazing factoring professionals, supply chain professionals, one of them being called as Factoring Guru. And between two speakers, we have more than 50 years of experience in the studio today when it comes to factoring and supply chain finance. So, I'm going to take you to them. But before that, let me quickly talk about India factoring. India Factoring is a financial services provider and it provides working capital solutions through factoring product aimed at converting your receivables into cash. The company is subsidiary of a European bank known as FimBank PLC, Malta, and is registered with RBI as NBFC Factor. India Factoring is also AD3 category authorized dealer. Through our global network, we offer one-stop solution for account receivable finance. So this is about India Factoring, and let me now introduce our first speaker. Our first speaker today is Mr. Keng Leong Lee. He is a veteran in factoring. Like I said, he is called as factoring guru by people. And he has very vast knowledge in factoring through training in US, UK. Upon he went to he went to US and UK, and then on his return to Singapore, he set up DBS Factor, which was absorbed by DBS Bank in 2001. Mr. Lee became the head of DBS Regional Factoring. He was involved in providing factoring services to a range of companies from MSMEs to large corporates. So here comes the vast experience, not particularly from a particular segment, but from all the segments, and that's why we are going to hear a lot from him today. In 2012, Mr. Lee became Managing Director of BB Financial Services Singapore, a subsidiary of BB Financials UK, the world's largest independent factoring group. In 2015, he became the Asia Chapter Director of FCI and traveled widely in Asia to promote international factoring as well as to conduct training on factoring in emerging markets. And that's where I got an opportunity to meet with him in person. He's currently the Asia Pacific representative of HPT Landscape, the world's leading digital factoring, SCF, and asset-based lending platform provider. He's also the author of recently unveiled ICC Academy e-learning course on factoring. Please welcome Mr. Lee. Mr. Lee, thank you so much for joining in, and we are looking forward to learn a lot from you today.
Thank you.
Now is the time to invite our next speaker, Mr. Ravi Valecha, Chief Executive Officer of India Factoring and Finance Solutions Private Limited. Ravi is a professional banker with 20 plus years of rich and insightful experience in banking, with expertise in corporate and retail banking, business development, product development, and credit. He's a specialist in factoring and supply chain finance. He's a well-known name in field of factoring and currently leads India Factoring and Finance Solutions as Chief Executive Officer. India Factoring is a market leader, and very recently we announced that this is fourth year in a row that we have maintained the leadership position in export factoring. Besides acing his ever-challenging role at India Factoring, whenever he gets some time, he loves to support students and young professionals by guiding them with his knowledge and wisdom. Please welcome Mr. Ravi Valecha. Thank you, Ravi, for joining us. And like I said, between two of you, we have 50 years of experience in supply chain and factoring. So our viewers are going to get a lot of insights from both of you today.
Thank you, and pleasure to be on call on the session with the Guru, Factoring Guru, Keng Leong Lee.
Thank you.
Thank you.
So I'll go to Guru first, and my first question would be to him. Mr. Lee, as we know, MSME is backbone for any country. They not only support employment, they also help in GDP. Like in India, if we look at the numbers, we are around 63 million in terms of SMEs, MSMEs. And they also provide 8% of GDP. Besides that, 48% of manufacturing comes from them, and job and employment is another thing. And it is very close to an individual user also. Like I know some of the MSMEs in my vicinity, and due to COVID they had to close down their shops, and the pain was with me also, because those were my favorite restaurants or shops, or I had that kind of connect with them as well. So it's all about country and everyone in MSME. But when we look at the gap between the financing needs and where we are currently, it's huge in India. And I was also reading a report from FCI, and I found that it is similar elsewhere as well. The report states that there is unmet MSME financing need of $5.7 trillion. It's a huge amount, and they are unable to access financial services. It is declined because of various reasons. It can be poor credit history, or it can be any other reason, and it is declined. So what are the options with MSMEs that they can avail when it comes to their financing needs?
Thank you, Gauri. And first, I would like to thank India Factoring for inviting me to this webinar. And second, I would also like to congratulate India Factoring for being the number one in export factoring for 4 years. Okay, it's not an easy task. And I also like to thank Ravi for being the expert reviewer of the ICC Academy e-factoring course. Okay, now, it is not due to the poor credit history alone that the MSME are unable to get financing. And that's why there's a huge gap. It is because when the banks provide financing, typically they need collateral. MSE in their initial years are unable to provide the collateral required by the banks, and hence they do not have the access to the financing. However, the accounts receivable form about more than 50% of the MSME asset. This receivable can be encashed to get financing. We know that banks also provide receivable financing. However, as you know, their receivable financing or factoring is based primarily on the credit standing of the borrower. Okay, whilst the factoring company, on the other hand, the amount of financing they can give is based on the receivable outstanding. So let's take a look at this example. Assuming an MSME has got a credit standing which is good for 500,000, and they have receivable outstanding of 5 million. When they go to the bank will probably be able to give them 500,000 or slightly more. However, they will be able to get up to 4 million from an independent factoring house, Indian Factoring, because this is based on the debt outstanding. Okay, so 5 million, and 80% of the outstanding is 4 million, provided they are selling to debtors which are acceptable to the factoring company. And best of all, the amount of financing that they can get grows with sales. So the more they sell, the more financing they can get, provided they are selling to acceptable customers. And based on my experience in the early years when I was doing factoring for the MSME, I've seen SME growing from a small company and then sending more invoices to us, that subsequently they become listed in the stock exchange of Singapore. So you can see, with the powerful financing from the factoring company, the SME can get unlimited financing if they are selling to acceptable customers and continue to grow to be large corporate. I can't hear you.
Gauri, I think you're on mute.
Yeah, I thought, Mr. Lee, your video was frozen. So thank you so much for explaining this. And yes, at India Factoring also, we say that we grow along with our customers. So like you said, from SME, they become large corporates. I have seen it happening in reality. So that's a wonderful way to do things. And that's where factoring also supports such customers. So, Ravi, I would now come to you, and I'll go back 7 years. And when I joined India Factoring, that was first time when I heard about factoring. Before that, I had never heard what is factoring and what it is all about. And later on, when I started introducing myself and talking about where do I work, generally when I would say India Factoring, the first response would be, okay, you work for a factory. What do you manufacture? It happened many a times, and then I stopped clarifying myself to people. But in last few years, I have seen that things are improving and people have started understanding factoring. So I don't have to explain it as much now, but still, what do you think are the reasons that factoring has not grown in India yet? And what are the misconceptions associated with factoring? The biggest one is when people say it's a factory. Over to you, Ravi.
Thanks, Gauri, for that question. Of course, your question is relevant from 7 years. I would say that even today, in many places, people may not be aware about factoring. However, that's something on the legacy front. I would say more so on the people being used to a particular way of availing finance, or banking finance. In India, in particular, I would say that India has been lagging on the factoring or supply chain finance for a number of years. The first factoring entity was started way back in 1990s, early 1990s. Since then, however, the factoring business has never grown. As per the last statistics from the FCI, if you were to see compare, India's numbers will be possibly amongst the lowest in availing the factoring as a normal means of a working capital finance, as against the traditional finance which is available from the banks. So that has been the dependence. The reason being that people were used to avail the banking finance as they have been used to, and any change comes with a huge amount of resistance, is what has been seen historically. However, in past 5 years, specifically, I would say there has been particularly changes in the reforms which have been brought out by the regulators, the emphasis on more of a transaction bank facilities being provided to the customers, and as Mr. Lee also mentioned about the reach and availability of finance, or doing enabling financial inclusions for the MSME sector as well, where banks insist upon collateral or some sort of a security. The factoring product does not require any such. They provide finance basis the underlying strength of the receivables. And as example has been given, there is a definite beneficial treatment being available. Past 5 years, there has been a change with the numerous regulation changes being done, enabling the factoring as a go-to product for the working capital for not only MSMEs but across the segment customers. There has been various other initiatives by the regulators being done. However, any initiative which is taken, it takes time to evolve. To just paraphrase, the regulation in India, which is the Factoring Regulation Act itself, was brought about in 2012 odd. From there on, the progress has been slow, but definitely it has picked up in last 5 years. And I would say that next 5 to 7 years is the industry for the factoring and supply chain finance. It is going to be the go-to product from working capital finance point of view in Indian banking and financial sector at least.
Thanks, Ravi. That is helpful. And would you also like to talk about the myths associated with factoring, that people do not try to avail it and they are deprived of this facility?
Indeed. So the myths primarily being, as you rightly mentioned, the misconceptions about the product, the misconceptions about it being availed as a last course, or the hesitancy specifically from the customers, that is MSMEs, to avail, because the buyers may think that you are availing factoring, so you are in dire need of money. It's not the case when you are in a dire need. As Mr. Lee also mentioned that, in his career, he's seen customers evolve from MSMEs to growing up to the large customers availing factoring, because factoring in true essence is actually selling of the receivables and deleveraging yourself. So it's a huge benefit as against a debt or a loan which you will carry when you are availing finance from a bank, which will be carried as a loans and advances. It's a true sale of receivable. In case of with recourse, you carry only a contingent liability. In case of a without recourse, you don't even carry a contingent liability. So huge beneficial treatment from factoring vis-a-vis the banking finance. The resistance is primarily on account of these myths which are there, understanding of the product, the new age product. This is for the people as a last resort. Buyers will see it as in a bad manner. I would like to also clarify that in the in the matured markets in the developed countries, factoring is the go-to product for most of the customers for availing working capital. When you reach out to the bank for any other banking services apart from encashing your receivables, you take a loan for for project finance, you take a loan for various other needs, but not for against the receivables, because it's an inefficient way of raising finance against the receivables. So that's definitely the myths which carry are preventing people from moving ahead. However, last few years we have seen a paradigm shift, and more customers are moving towards factoring, and definitely that ilk is going to grow from now. And we see that, in fact, I would like to also bring in the support extended by the buyers, the corporate buyers. In most of the cases, they are growing more and more aware, and bringing in the best practices by providing that sort of a means where customer can avail finance by way of working capital through factoring or supply chain finance. There is a paradigm shift in the awareness and the support being provided by the corporates as well.
Thank you, Ravi, for listing the myths. And it is very clear from what you and Mr. Lee said that people grow from being MSME to large corporates through this product, with the help of this product. And there's nothing negative about this product, the way people perceive it, the myth associated with it. So more and more people should come forward and take advantage of this product. And on this note, I would like to bring about that all the countries, all the governments are trying to support MSMEs, because we discussed that they are the backbone of the country. So they are exporting more and more. Now, when they export more and more, in these days, they are going for open account terms with SMEs, and they are not comfortable because they have to grant credit terms, perform collection, and face the risk of non payment as well. So, Mr. Lee, I would like to understand from you, how do you see factoring companies, especially the non banking factors, helping SMEs and MSMEs to overcome such a problem?
Okay, export factoring help the exporter, especially the MSME exporter, to sell on open account terms. Okay, SME are worried about selling on open account terms because of three major problems. Number one, what happens if the buyers fail? They will get into bad debt. Number two, granting on open account, selling on open account term means granting credit terms of up to 90 days. And as you know, customers may not pay on time, and therefore the working capital will be larger. And they are also required to perform collection. As you know, Indian exporters speak good English, but unfortunately, you're not selling to the world where they only speak English, because you're selling to Europe, they speak many languages. And if you're expanding to China, the Chinese speak Chinese. So how does the export factoring help to overcome these three major problems? Number one, the export factors will be able to provide credit cover of up to 100% of the invoice value. That is, in the event that the debtors fail to pay due to financial difficulties, the export factor will pay up to 100% of the invoice value. Second, upon delivery of the goods or shipment of the goods and submitting the supporting documents to the factor will be able to grant an immediate advance of up to 80% of the invoice value. And under this export factoring arrangement, the export factor will also be able to engage the correspondent overseas to undertake the collection function. So the collection function will be undertaken by the professional in the respective countries, and you don't have to worry about the time zone differences, language barriers, and overseas special trade custom and practices. Now, in terms of the export factoring, India factoring has got a special role to play and a very important role to play. Why? As you know, in Europe, most of the good import factors, or in fact, all of the good import factors are non-bank financial institutions. And so here comes the problem. When the bank do export factoring, they can only deal with banks. Okay, but unfortunately, the banks over there, not that they can't do, but somehow they are not good in import factoring. So therefore, because India factoring is a non-bank financial institution, they are able to deal with this non-bank factor. And therefore, you find that if you want to go for export factoring to Europe and to the US, you got to find India factoring because they are the one who can give you the sort of services that you need. Yeah.
Thank you, Mr. Lee, for this shout out, and I hope the listeners, the audience would get benefited by it. And what you said that if you avail factoring, you don't have to go invest your time in learning a new language or be awake at night. You can focus on your main work, and rest of the things can be taken care of by companies like India Factoring. Now I'll take up a question from audience. This is from Anand Shekhar. He is talking about fintechs like Drip, Moglex. They are entering into export factoring business. Though these fintechs are backed by reputed institutional investors, however, they are looking to fund the upfront payment to exporters via bank finance lines on factoring company. As a bank, what are the key things to be looked upon in the PL and BS of factoring companies? Ravi, would you like to take it first from Indian context, or Mr. Lee, would you like to?
Okay, I look at it from the banking perspective.
Sure.
Now, the banks look at financing in a different way. So bank would typically be more concerned with the credit standing of the seller. So you do a lot of investigation on the credit standing of the seller, as I mentioned earlier. Whereas in the factoring company, they look at the buyer as well. So I'll give you an example, which I've seen in some banks. Now, the bank established a credit standing that the borrower is good for 500,000 or maybe 1 million as an example. Okay. Now, the bank has got many products, working capital products, overdraft, okay, and all the other unsecured product, including factoring. So if you were to be the bank RM, you have $1 million and you have 4 types of product to offer. You can only offer one. Out of the 1 million, you can offer to one type of product to the borrower. And I think the RM would choose the easiest product out because factoring, we can grant more to the client primarily because it requires a lot of checking to ensure that you sell to the debtors. We need notification. So with a 1 million to be shared with 4 products, by and large, the relationship manager will give it to the product which they think has got the least operational problem. So factoring is therefore put at a lower priority. So yes, while the bank can do factoring, out of this unusual situation, you find that factoring is at the bottom of the product offering by the relationship manager. And as a result, you may not be able to get the factoring facilities from the bank.
Thank you, Mr. Lee. Ravi, would you like to add something?
Yeah, I would like to add. So yes, definitely there are a lot many fintechs emerging in the market space now. Like we are seeing the fintechs emerging in the entire financial services sector. It's important that the emergence of fintechs is there. However, we need to have the balance which is required. So, although I would not say that what Ms. Lee also mentioned is the bank, the way they will end up assessing more from a balance sheet point of view, a factoring company will assess more from an P&L or a turnover point of view. It's important to have a balance, I would say. A lot many fintechs, they do not pay attention to the due diligence, which is a key element of a factoring, I would say. In fact, the most important element for a factoring company is the due diligence. Many of them, in a way, do not go the full hog on the due diligence aspect. They ride on the primary comfort of credit insurance, that is, a credit coverage being provided by the insurance company or the overseas factor. That's not the mitigant. If you were to speak to any credit insurance or bank or a factoring company who underwrites a risk, they will tell you that you assess a credit as if there is no credit insurance or there is no credit coverage. So whether you can underwrite a risk on an independent basis, considering the strength of the receivables. A credit insurance is a mitigant later on. It's not a primary security, it's a secondary security which comes in only if you have done. And we have seen historically, talking from the experience in past, we have seen many a times that there have been rejections of these claims primarily because the underlying due diligence, which is the most important aspect, is not done. And also there is an amount of right selling which is required, which is actually the ground reality, which is the most important aspect, is the right selling. So there is definitely the emergence of fintechs. I would say that in few years time the fintechs will consolidate, and definitely there will be some basic regulation being set on the fintechs to guide through the working of the product. I've seen recently the regulators have announced a separate department for fintech itself. As soon as the regulations come in, there will be a level playing field, and there will be some regulation, which is the most important aspect. Banks are heavily regulated. Non-banks on equal parameters, they are also equally well regulated by the RBI in India and across the world. On the contrary, fintechs are currently not regulated, or regulated in a very less manner, which is the most important aspect. As Kanglionli also mentioned, that when a bank or an overseas counterpart is assessing, there are stringent requirements, AML from an AML point of view, which are most important to be considered, because these are increasingly gaining strength across the world. Compliance matters, and rightly so. I would say that these are important aspects which needs to be considered. Regulation only brings in these compliance requirements and adherence to the requirement, a minimum thresholds, a minimum capital requirements, because uh, the fintechs being backed by the institutional investors, they push for the valuations, they push for the growth. That is the top line. However, they disregard, many a times, I would not say all the times, but many a times they disregard the bottom line and the impact on the market. And that's where it is extremely important that a balance is achieved in all aspects, both from regulations point of view, investors. We saw the instance which has happened in the across the world through a fintech platform which went bankrupt. It was a few $1 billion of impact to the investors. It was the impact on the regulations. It was an impact on the credit insurers, and across the industry, there has been a huge hue and cry about the way of working of supply chain or supply chain finance. So that's where it is important that these things are taken care of, and I'm sure that these things will be taken care of.
Thank you, Mr. Lee and Ravi, for explaining it so well. So, for me, in terms of layman, answer is about specialization. So when I fall sick and I do not know what it is, I go to an MD. But once I know there's a problem, I'll go to, say, if it is related to ear or nose or anything like that, I will go to an ENT. I will not go to a MD anymore, because I understand it's all about having that knowledge, that specialization, and like Mr. Lee said, multiple products. And here you are focusing only on one product. So thanks for it. And we are moving forward with another question. It is from Parmanandan. It is directed to Mr. Lee, and he says credit cover availability for export factoring in Asia Pacific countries still lags compared to developed countries. Do you see any progress on that front, Mr. Lee?
Okay, basically, there are many. I don't know whether which company you have approached in respect for this export factoring. So um, it's a function of which export factors you approached. Okay, and because it depends on the connection. In the case of the Asia Pacific, there are certain countries and there are certain import factors who are able to do import factoring. So in this particular connection, you have to work with the export factor who is able to lead you to whichever factors that is looking at it. Yeah, granted that in Asia, there is also a bit of the problem in this area in that many of the export factor traditionally are looking at the exporting rather than the importing. So progressively through the FCI, India Factoring is a member of the FCI. Through FCI, they will be trying to develop and to find the import factor which are able to provide this form of financing. And some export factors are able to link with credit insurance company to provide the export factoring. So if you look at export factoring, it can be done in via two factor through an import factor in Asia, or it can be done with the export factors taking up an insurance cover and providing it to the exporter. So export factoring is not related. It's not only strictly dependent on the availability of import factor. It can be done in another way. For example, through working with credit insurance company. So it's a function. Is depending on which export factor you approach, because if it's experienced export factors, they will have various way in undertaking export factoring.
Thank you, Mr. Lee. So I hope Parmanandan has understood that it's all about approaching the right export factor, and if he does that, he would be able to get the cover. Thanks for bringing it up, Parmanandan. And we now move to question of Vinod Chaube. It is directed to Ravi. He says the factoring requires to be promoted in huge way. We all know potential of the product. However, to make this financial solution accepted by manufacturers, especially MSME and SME, should government not restrict such manufacturing entities to avail finance through factoring? And he further suggests that this way SMEs and ME may not appear helpless, arranging collaterals for financing. So this is to you, Ravi.
Yeah, absolutely. So there are ways. As I said, there are reforms being undertaken by the regulators. As we speak, few days back, also the regulators have further provided reforms where the other non-banking finance companies, we are like non-banking finance company under a specific category of a factor, but there are other non-bank finance companies who can also end up upon request and under license from RBI, they can provide factoring. So above a threshold, they can provide as one of the products within their regular working. So that is broadening the supply of working capital by way of factoring to the customers, that is the SMEs and MSMEs and even larger customers who can avail factoring. What is more required is what you said, that insisting or making it mandatory. Now, there are two ways of working on any sort of thing. One is the carrot and one is the stick approach, which the government is also promulgating. It has been seen under the MSME Act itself, in India at least, there is a provision where the large corporates or whoever is the buyer, the corporate buyer, has to make a payment within 45 days to the MSME supplier. So there are ways and means where the reforms are being undertaken, where the regulations are being promulgated to insist upon early payments or to ease and provide the working capital ease to the suppliers as such, which are the most likely the MSMEs. So there are ways and means being worked out. There are acts being laid down. There are regulations being formed. There are further reforms being formed where more and more such enablers are being formed. Another such important enabler, as I said, especially from Indian markets point of view, is the now availability of credit insurance in India itself. Credit in insurance, as I said, it's not the primary mitigant. However, it's a credit enhancer to a great extent for the MSMEs who are not able to provide any collateral or security to the banks to avail the finance. When you have a credit insurance, it enables and the strength of the receivable is good. On the basis of that, a financial services company backed on the strength of the receivables and a secondary mitigant being a credit insurance, they can provide easy working capital finance to the SME suppliers, which is a key enabler. So many key enablers being formed, and also there is another regulation which mandates the particular segment of customers above certain turnover to necessarily provide working to necessarily be on the online exchanges which are factoring exchanges where the corporates are supposed to be there. How much effective that has been proven on the ground is it's new thing. It's a new initiative, so it is still a start which is seen, but definitely there is a strong progress being made by the exchanges, that is the receivable exchanges which have been created in India. I see that the next 5 years is the growth towards that, towards a huge amount of financial inclusion, not only on the exchanges, but other means, regular factoring companies, other work banks also possibly starting factoring. So there is a huge market, and I definitely see that there is a strong scope of furthering the progress of factoring companies, which has been initiated by factors like us. It's all about creating the awareness and the reach and an acceptance. And as I said initially, there is a huge amount of acceptance, not only from the suppliers' point of view, but also from the large corporates who are more than willing to support the initiative.
Thank you, Ravi, and thanks, Vinod, for bringing this up. This reminds me of my friend Renu. She left her corporate job around 4 years ago, and she ventured into this entrepreneurship, and she started a business falling into MSME categories. And I remember she mentioning it to me that she visited 16 banks, and yet she could not get any loan without collateral and all the requirements that they were raising for. So, what Ravi said, it gives a light of hope that for people like Renu, things are going to be easier now. So, thank you, Ravi, for this positive thought process. And I would now take up next question, which is for Mr. Lee. It is from Deepesh Salvi, and he is asking, could you advise on what has promoted factoring product globally, which can be implemented in India to bring product awareness? Yeah, so we spoke about it a while ago that why it is not famous in India, and now our audience wants to understand what can be done. So this is a solution-oriented approach that what can be done to make it better in India. Over to you, Mr. Lee.
Okay, basically, I think one of the important thing is the promotion, which I think India Factoring is now doing it, because once you get promoted, promoting the idea, more and more people will be aware of it. Now, the second thing, which is happening in some other country, is that one of the major hurdle in helping factoring to grow is the buyer objection to factoring. I think this is probably also quite common in India. Now, the Indian law, similar to the Singapore law, is a gold standard for both the buyer and the seller. Why a gold for the factors and the buyer? Why gold standard? Now, when you under the law, when you send the notification, the buyers cannot set off or contra. They have to pay to you if they accept. So that is a very good law for the factoring company. However, there is also another gold standard for the buyer. Why? The buyer can reject the factoring arrangement. So what you find is there's a stalemate. A good law for the buyer, a good law for the factoring company, but it doesn't move. So what is happening now? In the UK, the UK government has passed a law to what you call pass a law such that the buyer cannot raise objection to factoring.
Correct.
But however, they retain the right to contra and set off. In this particular situation, you find that the factor will only factor those that with lower set off and lower contra, but yet it can move versus a situation where it doesn't move because buyer object to it. This law has also been taken up by China. As you know, China is now the world's second largest um, uh, factoring country in the world. So they have also passed a law that the buyer cannot object to assignment. So in the UK, they have passed a law. In China, they have passed a law, and traditionally, this is the law in US. In the US, the buyer cannot raise objection to factoring. So what I would see is that more and more countries, through representation to the government, uh, will have to get this particular law to be passed to allow, to prevent the debtors from raising objection to factoring. And once this is done, you will find that factoring will grow substantially. And in fact, these two countries, the these two countries, UK and China, they are these two countries that they have passed this law, which will enable their SME to have access to the factoring arrangement. So I hope that the factoring companies in India would take up this and present it to your government.
Thank you, Mr. Lee, and I hope Dipesh understood it that it's all about strong laws that UK and China have, and that's where they are very progressive when it comes to factoring. So in India, we look forward to you, Ravi, and we look forward to representing it to government and having those laws.
Absolutely.
I'll now move to next question, which has been raised by Miss Alake. I hope I am pronouncing it correctly. This is directed to Ravi. And Ravi, she is asking if you can comment on any challenge of access to wholesale finance for NBFIs like you where you are not deposit taking. In Latin America, factoring funds are being licensed by securities regulator to directly acquire receivables and finance them by fund mobilized from institutional investors. It's good to have someone from Latin America, and we will be good. We are happy to know that how it is done there. So over to you, Ravi, for her question.
Thanks for this question. Very pertinent. Definitely, there is a challenge in accessing wholesale finance for non-bank finance companies like us, especially in factoring. Uh, Beneficial for us, a blessing in disguise for us. We are a subsidiary of a bank, so that's not a challenge for us. However, definitely yes, the challenge for other stakeholders, if new entrants, if in this segment, can be definitely there. So towards that, there is always through the mechanism like FCI or through the global fintechs which are coming in, there is always a possibility of institutional investors backing these sort of transactions. We have seen globally the emergence of funds who are willing to invest in these the trade-backed receivables funds, what we call globally. Typically, what investors want to see is the global investors, which are the fund houses, which are an assimilation of investments by various HNIs, corporates, or whoever. They want to park or invest the funds into the options which can provide good amount of return. Uh, Trade-backed receivables sort of a funding mechanism provides a very good opportunity where the financing is for short term. The returns are seen over a period, like most of the credit terms range from a 90, 120 days or so. So you have a you have a rotation or a turnover which provides an easy liquidation mechanism, and the returns are provided on that basis. More and more such funds are actually taking interest across the world. We have seen lot many funds who are interested in these segments across the world. In India, unfortunately, yet to pick up, but definitely there is an interest being seen across the fund houses who want to invest in these funds. We have been in discussion with some funds who are interested, definitely. But it's early days in India, at least as of now. But definitely there is more and more coming on the fore. As I said, next 5 years will change the dynamics of supply chain finance and factoring as we have understood historically, but it is going to be a completely different affair in next few years. And more such funds who are looking at investment opportunities in in emerging markets, especially with right amount of returns being provided, the risk being much lower. I would say much lower in the sense of comparison, comparatively lower. More and more such funds will emerge in India as well, and provide funding opportunities for NBFCs. I hope that answers that.
Thank you, Ravi, and thank you, Ms. Salake, for bringing it. And we are towards fag end of the show, so I'll quickly bring up few questions for Mr. Lee. Mr. Lee, Vinay is asking how important is the role of factoring when it comes to effect of COVID to SMEs and MSMEs. What can be done to change the government to make for factoring companies keeping the growth of MSMEs in mind? And as MSMEs are real nerves of the economy. So we discussed about MSMEs a lot, and Vinay would like to know further. Over to you, Mr. Lee.
Okay, obviously, as you know, as a result of the COVID-19, many of the government worldwide has given funding, special funding to cover over this during the COVID-19. And many of these funding that is provided by the government uh, is expected to expire this year or next year. So when the government give you a loan of say 500,000 and it's repayable uh, this year, what are you going to do? You got to repay the loan. So in this particular situation, you will find that the receivables, which form a substantial portion of your asset, you should use these receivables to go and get financing to pay off this funding that's provided by the government. Now, what I find is that from many years of doing the doing factoring, actually it's not the government problem. The main problem lies with the MSME themselves, because the MSME, for whatever reason, do not want to try factoring, and they typically prefer to go for banking facilities. There are many factors in India, and I think India factoring is one of them. They are waiting for you to call on them to say, I need financing, and they will be able to provide you with the financing. Okay, because I think the way the bank look at, the way the factors look at the financing is very different. So it is not the government help per se, but it's more the MSME themselves. If you open up yourself and talk to the factoring company, especially the non-bank factoring company, you will find that you will be able to get financing. So I think the hurdle is more the MSME themselves than the government policies.
If I may add, Gauri, on that question. Yeah. Okay. And now, Vinay, thanks for this question. Rightly so, as Mr. Lee also mentioned, Besides that, the regulations do provide. COVID, in fact, has brought on certain aspects of the trade which have been hidden hitherto. The aspects which made people not rely on factoring as an mechanism in banking finance. In most of the banking finance, as you would have seen in India or globally, as Ms. Lee also mentioned, the government backed certain forbearance, or providing easy loans, delaying payments, various other things were provided across the world by the regulators and the banks. However, believe me, on factoring front, the companies who availed factoring, they were in much better shape because they were availing finance against the underlying receivable. Imagine a situation where the supplier is supplying some components to a laptop manufacturer or a PC manufacturer or a car manufacturer, so an auto component. They are a well-established suppliers to the large corporates who are manufacturing these goods. They are equally dependent on the supply chain, a well-oiled supply chain, even during the pandemic, because their sustenance and their growth is also dependent on these suppliers after COVID also, right? So believe me, most of the corporates buyers went a step further in ensuring that the receivables which were payable were paid on time. And where many customers who were not availing factoring or who were availing the banking finance had to rely on forbearance measures, where customers had availed factoring or relying on factoring as a means of finance, we saw a trend where the buyers were well established and willing to cooperate and willing to support the suppliers by making most of the payments on time, despite the COVID situation being there. So these are the trends which have been seen. Another important aspect during the times of pandemic, in a situation where things go bad, where the large corporates also get affected, that's the underlying strength of the factoring, especially on the non-recourse, where the credit insurance or a credit protection is provided by the factor, right? And that's where the importance of having a secured coverage on the buyer risk coverage, which the factoring company provides. These have been tested in COVID situation, and believe me, most of the customers who have availed factoring are appreciative of these two, important areas which the factoring company addresses. Thanks.
Thanks, Ravi, for explaining how it helped people during COVID times, like when I brought it up. And thanks, Mr. Lee, for bringing out that it's about mindset and it's about change that MSMEs also will have to have when they want to grow further. So on this change, the game today is all about change. It's all about technology. Like we all of us are connecting just because of technology. So technology plays a very important role, but we see that there are a lot many investments. Like talk about telecom, they put in a lot of infrastructure. They invested huge in technology, and later on came WhatsApp, and the text business went for a toss. So when it can happen with such large players, what would be your advice as a technology professional, that what parameters they should be looking at when they go for upgrading their technology? Because it's ever changing world, you never know for how long a technology is going to survive. Over to you, Mr. Lee.
Okay, basically, as you know, technology has made things simple, and technology keep on changing. So, for technology actually favor the not the incumbent but the new player. You know, that the especially the existing player, most of them has got a legacy system, and the legacy system is difficult and expensive to replace. So typically, in order to go into digitalization, you find that many would have the front end, which is digital, but the back end, it is non-digital. So therefore, there could be operational risk. However, a company which want to go into the new technology should choose a platform that would enable you to go through end to end. end-to-end digital. It covers the buyer, it covers the seller, and it covers the funder or the factors. And so what? So the front office will be digital, the middle office will be digital, and the back office will be digital. And you should choose a single platform which enable you to be digital. Now, what is different now is that in the olden days, when you want to go into a new, you want to computerize or operation, you have to invest very heavily on a huge infrastructure. Okay, and and you also have to invest in IT personnel. But however, currently the technology has changed. You don't have to invest in high IT infrastructure. You don't have to invest in IT staff. It is a plug and play system. Now you can avail yourself to systems which are available on cloud. It's a plug and play. Just plug on the laptop or PC, you will be able to run your business. And your client will be able to use their mobile to access the system. Okay, and the new technology should also come with risk analytics, because it's not just only providing you with factoring, but it must come with risk analytics to prevent fraud. And at the same time, it is a predictive tools to enable you to predict the customer's need. Okay, through this analytics, you'll be able to know, oh, the customers has got needs, new buyer, there's an increased sales, you can increase the limit. You do not have to wait for the buyers to ask for the request for the increase in limit, but through this predictive analytics, you will be able to know when to grant the customers more facilities. And the new technology should also embrace document management. Now, with this document management, you'll find that the onboarding process will be digital. You no longer have to submit physical documents. And as you know, most of the MSME will now have a mobile phone or a laptop. Now, they can submit document digitally to you. Now, submitting document digitally means that they cannot fraud. Okay, submitting physical document, they could fraud. So they submit document to you digitally. You are also linked to the credit agency digitally. So the onboarding process will be digital. The funding process will be digital, and even the client will be able to see their information digitally on their handphone. So this is the way that things are moving. And the thing is that technology has made things simple. Technology is cheaper, not say very cheap, cheaper and not expensive. And the new technology enable you to have end-to-end process in a digital way. Yeah.
Thank you, Mr. Lee. And rightly said that technology is an enabler and you cannot survive. The question is of surviving and thriving, then you have to have technology. And in our world, we are all talking about fintechs because even financial inclusion is through technology. I remember my early days when we were trying to move to digital, and the initial investment would be so huge that you would not want to do that. But today, like you rightly mentioned, it's plug and play, it's available on cloud, and the cost is not high. So people should take benefit of all technological solutions that are available, and I'm sure this would definitely help our audience. So thank you so much, Mr. Lee and Ravi. It was wonderful speaking to you today, and we got benefited by this 50 years of experience between two of you. And I'm sure our audience also got lots of insight. We could not take one question from Ms. Elake, and we will definitely come back to her with the answer. But it's time to close. We have already overshot the time. So thank you so much once again for being with us and helping us understand how is factoring supporting, what is happening happening in other countries, what can be brought to India to make things better. And we look forward to a brighter future tomorrow for the backbone of the country, which is SMEs and MSMEs. Thank you so much once again.
Thank you. Thank you,
Thank you.
Gauri.
Bye bye.
Thank you, Leon. Pleasure to be
Great.
connected again. Thank
Bye.
you. Thanks.
Thank you. So, here were our factoring professionals, and we got to learn a lot. We could respond to all the questions except one, and we are going to take it up later. So, if you want to know more about factoring or India factoring, you can visit our LinkedIn page or you can go to our website. And I'm taking your leave. We will be back with another interesting chat show on similar topics next month. Thank you.